is going on, everybody? Welcome into another edition of the Daily Energy Newsbeat Stand-Up here on this gorgeous Monday, October 16th, 2023. As always, I'm your humble correspondent, Michael Tanner, coming to you from an undisclosed location here in Dallas, Texas, joined by the executive producer of the show, the purveyor of the show, and the director and publisher of the world's greatest website, EnergyNewsbeat.com, Stuart Turley. My man, how we doing today?
It's a beautiful day in the neighborhood. I woke up kind of frosty this morning.
Oh, it feels great, Stu. I can't describe to you. It feels absolutely great. But don't worry, the website is not frozen. We still have an absolutely banger of a show. Stu's been hard at work this weekend, keeping it up. First up, Stu's favorite entrepreneur, Bill Gates, stuns audience by denying there is a climate crisis. Oh my goodness, Stu will dive into everything going on with one of his favorite tech leaders. Next up, the era of unquestioned and unchallenged climate change claims is over. The tide is beginning to turn a little bit. This is a great article by Alex Newman out of the Epoch Times. Next up, Bloomberg estimates economic cost of Iran-Israel conflict. Yeah, I mean, it's not good. We've already seen oil prices rise. I think Bloomberg does a good job of breaking down, as Stu will cover, exactly what this cost of this war will be. Next up, Treasury bond auction runs into weak demand amid fears that soaring U.S. debt will overwhelm Wall Street. Stu likes to add his own little hint to the title in there. De-dollarization, is that at the root? Who knows? Nice little picture of Janet Yellen there. Stu will quickly cover what happened in that Treasury bond auction and sort of how that ties in to what we're seeing throughout the flow of the show. Next up, we're going to go over to Russia. Russia's oil revenues surge. This is according to the IEA, who's probably about 6 months late on this. So thank you for stating the obvious. But nonetheless, great article actually showing what those revenues look like. And then finally, Qatar warns that it will cut gas exports if the attacks on Gaza continue. What does this mean to U.S. gas and LNG exports? I mean, really, the fallout from what is going on in the conflict in the Middle East right now is absolutely insane, and energy is oddly not at the root of it all, but one of the first things in the first order effects that could be affected by the fallout from this region. So as always, we will cover it all. Stu will quickly toss it over to me. I'll cover what happened on Friday. We really saw markets for commodities rise dramatically. Oil up 5 percentage points on the WTI basis. We saw natural gas fumble a little bit, and then we'll quickly cover what rig counts look like. A little bit of a change. We saw a little bit of a rise, so good for the drillers. And we'll let you get on out of here and start your Monday again. But before we do all of that, guys, remember the articles and analyses you are about to hear are brought to you by the world's greatest website, EnergyNewsbeat.com. Check us out. Stu and the team do a great job of curating that website, making sure it stays up to speed with everything that you need to know on the energy and oil and gas business. You can email the show questions at EnergyNewsbeat.com. You can hit the description below and see all the different articles. The best way to support the show is to subscribe to us on YouTube at Energy Newsbeat. We're also available on Apple Podcasts, Spotify, or wherever you get your podcast. You can also listen to the show directly on EnergyNewsbeat.com. Check out our Substack. We're everywhere, guys. Follow Stu and I on LinkedIn. Also, we're starting our ENB Insider. This is a cool little beta program that we're testing. Email us or hit up Stu on LinkedIn. Hit me up on LinkedIn if you're interested in being we would like to say, the tip of the spear of the energy news. We're calling it our ENB Insider group. We'll probably get together 5 or 6 times just to test out a concept that we're thinking about doing in 2024, which is really going to put a select group of people on the tip of the spear when it comes to what's going on in the energy business, and really kind of foster that more of that community feel. We've heard from a lot of people that you guys want to connect with everybody. So hit us up, whether it's at LinkedIn, message Stu. You can message me. You can also email us questions at EnergyNewsbeat.com to get a hold and find out about that. I'm out of breath though, Stu. Let's start us off. We got to talk your favorite guy, Bill Gates.
Oh, my goodness, Bill, Michael. When I met Bill, you're tired of hearing this, but he came up to my shoulder and his glasses were as dirty as you possibly could. Take your glasses, throw them in the driveway, scuff them up, and here's this knothead standing there. He's like this. What a goob. All right, let's start off with Bill Gates. Stuns audience by denying there's a climate crisis. I'm going to just say this man's a chowderhead. Bill Gates, he's worth estimated $7 billion, and he is questionable on his business dealings, quote unquote, Michael. There's a lot of climate exaggeration, said Gates at a recent event. The climate is not the end of the planet, so the planet is going to be just fine. What man, where did this come from? This is the same guy that was going around saying that we're gonna die and you got to eat bugs, and now we got to kill everybody.
Well,
I
also,
mean,
wasn't he funding things to like cloud seeding? Wasn't he behind all of the cloud seeding stuff where they're going to shoot stuff into the atmosphere, nuke the atmosphere to save us all from climate change?
Yeah, he's part of the World Economic Forum, and he wants to be all about control. And so he's bought a lot of farm. He's the biggest farm land owner in the United States, so he can control food. I'm serious. This guy, here's another quote. You can't have climate policy when one party's in charge, goes full of speed, and then stops cold. These are 30-year investments in steel factories. Hey, okay.
My question is, so what's his incentive for saying this? You're right. He was trying, he's amassed this largest private farmland because he says that, conventional farming methods have a negative impact on the environment. He's come out and said climate change previously would be responsible for more human deaths than COVID. That was pre-2020. My question is, what incentive now does he have to say this? Now, he's a smart guy. He probably knew this all along. The question is, in my opinion, what financial incentive does he have now to make this decision? Is he now looking at funding other sources, like, say, is he in on compressed natural gas? Is he going to go buy all the stuff that's collecting vapors over landfills? We talked about the stuff that BP's doing. There, in my opinion, there's got to be some financial incentive.
Follow the money.
Pushing. Yeah, exactly. So my question is, it'd be interesting to see what investments he's made recently.
He's made a couple of them, and they are not in the. I'm going to have more information on this, but here's where you have to look at. The head of the World Economic Forum said, "Oh, by the way, people are waking up and they're not taking the shots. We've lost control of the shots. We've also, hang on, dude, and I know, and we got to find a new way. Bill Gates is the tip of the spear." And I guarantee you, watch what he does. Okay.
I see.
Now,
a shill for Klaus Schwab. All right, what's next?
Let's go to the next one here. I love the Epoch Times here.
Yes.
This one is the authors of the papers are being attacked and say that activist scientists threaten the new findings are aggressively conducting orchestrated disinformation to discredit the papers and scientific reputation of the authors. Here's a quote out of here. William Happer, Princeton professor of physics. Physics matter, Michael. Believe it or not.
Ooh,
and of course, the climate cult will be dismissive of any information, no matter how scientifically correct. That is politically incorrect. It is. He was now ridiculed, Mr. Mann, for the famous hockey stick graph showing massive man-made warming. If Bill Gates is coming out and this guy is getting attacked for physics, Bill Gates is admitting it. That is really critical. When you take a look at the papers, even NASA, director of NASA Goddard Institute for Space Studies, is now got another one. He says he mocked Greenpeace's Patrick Moore, saying that there was more blank, blank, blank going around talking about bad things. Well, there's still going to be a big fight going on.
Yeah, I think it's important to say. So, what are these studies saying? So, let's just. I love looking at this stuff. This is in the research of astronomy and astrophysics. Stu, you've got 1, 2, 3, 4, 5, 6. You got like 14 people on this paper from all over the country. What does this abstract say? Since 2007, the IPCC, or the Intergovernmental Panel on Climate Change, has heavily relied on the comparison between global climate hindcast and global surface temperatures estimates for concluding that the post-1950s global warming is mostly human-caused. In Conley 20 et al., paper they wrote in 2021, we cautioned this approach to detection and the attribution of climate change was highly dependent on the choice of total solar interference, blah, blah, blah. Here's what they say. And at the end of it, therefore, it is still unclear whether observed warming is mostly human caused, mostly natural, or some combination of the both. The problem is we can admit on our side, yeah, we don't really know what the cause is. But they can't on the other side admit the same thing. And that's why we'll never be able to come to an actual consensus and move forward, because you've got one side who can't even acknowledge the science that's out there right now.
Exactly. And I have interviewed now twice Dr. Moore.
Yes.
He was just mentioned. Unbelievable. That one just went out on X as an update the other day. And so everybody can go see it out on X. Now, here's the other one. I interviewed Miss Curry, Judith Curry, and she was the author of Climate Uncertainty and Risk. She was phenomenal on the podcast, Michael. So when you start having a nice little footprint like we have on the Energy News Beat, it's kind of nice when all these articles are written by people. We've interviewed a bunch of these.
So I think, again, the point of all this is the consensus that everybody thinks climate change is going to kill us in 10 years. There's cracks in it. Now, the question is we're going to still have to follow the money on this, but at least from the standpoint of the consensus, you can tell, is beginning to shift a little bit, and that's great.
Oh, it is. Hey, let's go to the war here. Bloomberg estimates economic cost of the Iran-Israel conflict. Again, I just want to say our hearts and prayers go out to the entire area on this. Here's the worst case scenario. The world would be plunged into a recession and lose $1 trillion in GDP. Right now, Michael, 1 trillion in GDP spread out between the countries. Countries are on the edge because of printing money. You know how I feel about printing money. And we are facing already. Here's a couple quotes in here. Bloomberg economics analyst. Let's see here. It is, well, these three scenarios. No, hang on. Bear with me. Oh, the wider conflict the spreads, the more it impacts becomes global rather than regional. Conflict in the Middle East can send tremors through the world because the region is a crucial supplier of energy and a key shipping passage. And one other key in here for another analysis. The spare production capacity in Saudi Arabia and the UAE may not save the day if Iran decides to close the Strait of Hormuz, through which 1/5 of the world's daily oil supplies pass. There'd also be an extreme risk-off shift in the financial markets.
I mean, okay, so to answer the question, what's the worst case scenario? That right there.
Yep.
The closing of the Strait of Hormuz would be horrible in terms of short-term oil prices. Oil's at 87 now. You'd see 100, in my opinion.
Absolutely. And here's, and I talked
they say
about
150. This. Maybe, I don't know. It would be a lot. You'd see a large jump.
I talked about this, the trifecta of Rutro, and I've talked to several other experts over the weekend. You have the one, if Israel takes out the export facilities for and the downstream capabilities in Iran, we have a chowderhead in Lindsey Graham. Senator Lindsey Graham called for the United States to do that.
Yeah, that's criminal, in my opinion. You want to put us in a war? Not criminal, but I mean, holy smokes! I read that, I got a shiver. I said, "Oh man, they want a nuclear war with Iran right now."
He is the ultimate chowderhead. I'm sorry. Anyway, okay, so if that happens, step one, because they've sold $30 billion worth of oil just to China, but they now have over 70 billion in their coffers. The only export they have is oil. So that's a lot. So now if Iran counters and they mine the Strait of Hormuz, that is huge. Those two items are going to cause, those two single items. Here's the other third piece of this. you and I talked about this a little bit, and that is they're in the Club Med. A little bit more data on Club Med. The Leviathan field that Israel is really got some, they've got production out of, and it goes to Egypt. The Egypt natural gas has spare capacity in order to export LNG. What's going around the rest of the world with LNG? Very, very important. So the only way for Israel to ship natural gas to the market is through Egypt. Here's a really big issue. You have Turkey and Cyprus fighting over the border wall, like you and I talked about for years. It's now surfaced again. So if they're taking that off, Egypt is going to lose 20% of their energy, which is done by natural gas. Wow. I mean, all of those three things are like, holy smokes. Okay. What do you think?
Well, I guess the real question is what you mentioned at the beginning of this segment that with the current, this 1 trillion in GDP would absolutely cripple these economies, if only because of the fact that we've been printing money up to this point and everybody is already on the brink. You have this interesting article talking about the Treasury bond auction that ran last week.
Yes.
What does that have to do with all of this?
Okay, let's take a look at it. And there's some this goes back to BRICS. We're not going to jump into BRICS. We've covered BRICS a lot, but the US
I'm still mad we're not in BRICS, but that's the case. This podcast was destined for BRICS, and now we're not.
We're going to take the BRICS credit card though for sponsors. So
yes, that we will.
The article, Michael, that we're talking about is Treasury bond auction runs into weak demand amid fears that the soaring U.S. debt will overwhelm Wall Street. Mm-hmm. Holy smokes, Michael. The U.S. sold $20 billion of 30-year bonds, but the dealers had to take up more supply than they did. Normally, that's about a 5% is what the huge difference was. 18 is what they did. And normally, they only buy about 11%. China has bought over the years a lot of our debt. And this is how we fund a lot of things is through the Treasury bills or T-bills. So yield right now on the 30-year Treasury jumped 12 basis points to 4.856. I've been watching some of the big guys, and they'll take 5% money every day, and they'll get out of the stock market, Michael. So if they can get 5%, they don't care. They're just going to go park their money and let it sit there because they're not going to get hurt at 5% money. So this is just another sign that energy and finance is all related, Michael.
Yeah. Well, again, I think the other interesting part is you're seeing the more we're having to sell bonds, and that means there's, again, more cash. The Fed is getting more cash. And so what's the government doing? The government's spending that money in doing everything, increasing the cash supply. So this all comes back to, if now all of a sudden there's this huge global World War III, where are the bonds that we would sell have already been sold? We've already spent the money. So they're going to have to print the money in order to keep up with it. And we know that it's the sixth cycle we've been in. The Fed has sort of taken a stance as it leads later down in this article. They're not dubbing it quantitative tightening, but it's what they're doing. They're not buying as many bonds as they used to, so which means they're not reinvesting their proceeds from these longer-term assets into the shorter-term assets, by which reducing their balance sheet. So they're doing an okay job of that. The problem is, in order to keep this up, we're going to have to keep printing more money, which we've seen that leads to inflation. So it all loops into a global war. If you thought inflation was bad now,
buckle up.
Buckle up. All right, let's talk Russia.
This is also just real quick. There's one other story in here. Qatar to cut gas export if attacks on Gaza continue. There's really nothing in here other than Qatar is now saying, hey, if it keeps going, they're going to cut LNG exports off. And then Hamas and Iran are meeting in Qatar yesterday so that they can help get more things going. So that is the only reason we're going to talk about that one. So buckle up on that.
Yeah, no kidding.
Let's go to Russia's oil revenue surge. This is from the IEA, Michael. Russia, listen to this, Michael. 18.8 billion from oil exports last month. Last September was the most profitable month since July of 2022. How's them sanctions working out for you, Putin?
Well, it's got something to do with the price deck. I mean, oil was up last month, but yes, at the level at which Russia sells oil, price actually has less ish to do with it, but more in terms of how much raw exports and the volume that's actually going out.
Right. There's some numbers here that the IEA put out, and that is the agency estimates show that the country total exports surged on an average of 460,000 barrels per day, month on month, with crude accounting for 250,000 barrels per day of the increase. It's pretty crazy. They Michael, you and I talked about Russia banning their exports on diesel and refined products. They lifted that ban. So they've fixed their internal, and so they can now ship again on that.
China and India still biggest buyers. But I'm glad the IE came to this conclusion about 6 months past what we all really knew what was going on.
Oh yeah. Where do you think oil is going to end up in the next 30 days?
Oh, that just throw a dart on a dartboard, and that's what it'll be. I don't know if I have a good answer. I don't think it's going down from here. I don't think you're going to see $50 oil. I think $150 oil is more likely than $50 oil. But
right.
Until I see $150 on a price chart, it's gonna be hard pressed for me to say, yeah, $150 oil. We saw last year, we saw last about June, July 2022, we saw $120 oil. At one point. Now we don't only saw it for a little bit. Prices then declined from there. It'll be interesting to see if we can reach that. I mean, if any one of those three scenarios that we talked about in that Bloomberg article come true, you'll see a huge increase. If the Strait of Hormuz closes, we've now shifted from fundamentals to geopolitical. Yes, there's a fundamentals of supply and demand and all of the stuff going around there. But I think the sentiment on where oil prices go is now swung back geopolitically into a short-term, hey, what's affecting that underlying supply and demand versus, no one's waiting for the IEA to come out and say, this IEA report isn't moving prices as it might if there wasn't so much geopolitical tension. You know what I mean?
Oh, yeah. Yeah. Unbelievable.
Very, very, very unbelievable. So you got anything else for us?
No, buckle up and the consumers get it in the drive-through.
Yeah, well, we'll go ahead and quickly cover what happened last Friday in the oil and gas markets. We'll start just in the overall markets. S&P 500 dropped about 0.5 percentage point. NASDAQ tumbles about 1.25 percentage points, mainly off the back of some poor IPO performance. Feel sorry for everybody who thought they were going to buy Perkins stock. What a dumb idea. WTI crude oil up 5.75 percentage points, 87.69. Brent oil only up about 1.75 percentage points, currently trading 91.18. Natural gas, $3.32. That's actually a 3% drop, mainly again off the back of some cooler weather beginning to roll in. And so as people begin to roll over and we begin to start drawing from our reserves, it'll be very interesting to see what happens with prices, how much natural gas will go. On the oil side, mainly we're seeing prices, that big 5.5 price jump is off the back of the tension going on with the Israeli Hamas Iran conflict. So it's anybody's guess, as we mentioned, where prices are going to go from here. I'd be remiss to say if we didn't quickly know that, we did see an increase on the rig count of about 3 to 622 for the U.S. Canada had plus 13. Internationally, you're still dropping 12, which is interesting. I think the more important number is that 3 rig count increase from the United States is still down about 147 from where it was last year. But I think it's going to be interesting to see now if rig count begins to turn itself around amid this, what is considered. I mean, you asked me you think prices are going to be. What do you think, Stu, prices are going to be?
I always hate it when you do a nice political move like that, Michael. Well done. Well, what do you think?
Well, no, if you think prices are going to $200, rig
I
count
don't.
better be jumping by 20. Rig count's at 622. Everything's economic at $200. We should have a 400. We should see an increase of 400 rigs. That's my thing. If everybody think prices are going to 150, why are there not rigs being deployed by the tens week over week? We only saw
That's a
three
great
last
question.
week.
That's a great question, Michael. And I think legislation through regulations, people are in fear right now of that.
I disagree.
So,
I actually disagree.
disagree?
I think it's a sign that all of those 1,000 double economic premium locations that every M&A deal that we've talked about has garnered. Oh my goodness, we just bought 4,000 locations. Yeah, they've got 3. That's how I look at it.
I like your attitude. Hey, speaking of that, I'm looking forward to our new series coming up.
We do have a great series coming up. Deal of the week. It's going to be really fun. It may not be deal of the week. It'd probably be more like deal every other week. We're going to have to come up with a name because the goal is to dive in a little bit deeper to a lot of these M&A deals that we're covering and kind of break down, okay, let's say, for example, this Civitas Venture Energy deal, $2.6 billion. Did they overpay? We're not necessarily going to be able to answer, did they overpay? But we're going to be able to give an idea on, here's how you would go about thinking about that, or here's how you would break it down. And we'll do some smaller deals. Definitely want to dive in and cover minerals deals, but look for that. We're really excited to announce some partnerships with some great companies that make this process really simple and streamline it. And the goal is a workflow, a standard workflow that you run every deal through so that you can compare deal over deal. Because you need to be able to compare if you're an A&D shop, apples to apples. You don't need to be comparing one workflow in one deal with another deal, but a different workflow. Because how you build your workflow depends on what lens you see that with it. And that's all the stuff we're going to get into. It's going to be awesome. It's going to be available everywhere. We're kind of working out the final details. So we'll be able to announce some things hopefully in the next couple weeks, but stay tuned for that, guys. We got to come up with a better name than deal of every other week, but we'll come up with something catchy, but we hope you guys enjoy that. I'm looking forward to that, Stu. I'll tell you what, that'll be fun.
Yeah, I'm also looking forward to being in the Permian show this week and interviewing a bunch of people lined up. Got also with Mark Perlberg, CPA, taxes, and RT talking about ENB taxes and saving money.
RT Trevino, we love us some Pecos country operating.
Yes, we do.
So, all right, guys. Well, with that, hopefully we'll let you get back to what hopefully is not that many meetings on a Monday, but stay strong, guys. You got this. It's actually only a 4-day work week for me. I'll be out Friday. We don't really do anything recording on Friday, so you'll still hear me all of these days. But stay strong. 4 or 5 day week, it doesn't matter. Stay strong, folks. We'll be with you all week. For Stuart Turley, I'm Michael Tanner. We'll see you tomorrow, folks.